Hello everyone, Courtney and Jonathan here for the USAA Educational Foundation. Today we're going to talk about credit, not good credit, bad credit, or even extra credit. We are specifically focused on how to establish credit.
That's right, Courtney. At some point in life, you may want or need to borrow money to pay for a major purchase, like a car, home, or even college. Now, these items are expensive and paying cash can be difficult. This is where credit comes into play because it allows you to borrow money. But if you've never had credit before, maybe because you're young or never needed it, establishing credit can be tricky.
Yes, it can. So let's simplify the process and cover 4 common ways you can start building credit. And keep in mind, these are in no particular order.
One option, a secured credit card or loan from your bank or credit union. Here's how they work. A lender requires you to make a deposit, usually up to the credit limit. The deposit is considered collateral, and if you don't pay the debt, the lender can keep your money. It's less risk for them to lend you the money, higher motivation for you to repay it.
Thanks, Jonathan. And another approach is to say yes to one of those unsolicited credit card offers or to one of those retail store credit cards that cashiers are always offering us. Again, though, just don't say yes to every offer. And here's a quick bonus tip for extra credit. Even though we said we weren't going to do that, but here it is. Since these cards tend to come with higher interest rates, if you get one, be sure to pay the balance in full every month.
A third option is to become an authorized user on a loved one's credit card. If someone adds you as an authorized user, a new account will appear on your credit report along with all the account history. Obviously, the longer and cleaner the history, the better. But for those factors to help you, the card issuer must report authorized user activity to the credit bureaus, and your credit score must incorporate that activity in its calculations.
Finally, here's our last idea for now. You could set up a joint credit account with someone you trust. This can work because sometimes it's easier to get credit approved if you're not the only one on the hook for the borrowed money. In line with that, it's important to understand that both account holders are responsible for payments. Also, the account will appear on both of your credit reports. So, like I said, before you become a joint account owner, be sure it's with someone you trust.
Good stuff, Courtney. I have one final thought to share. That before you attempt any of the approaches we've covered today, be sure you can afford to pay back what you borrow and that you can handle your credit responsibly.
Exactly. The goal is to build credit, not debt, so plan ahead. To learn more about improving your credit score and building healthy credit habits, visit the credit section of USAAEF.org.
That's it for now. Until next time, take care.